Well, good morning, everyone. It's September the 6th. It's Friday, and I think Hurricane Dorian is finally behind us. I don't think there's going to be a lot of damage or rainfall. I think the worst is behind us, at least for Florida. Thank God. I hope every one of you is safe, and I hope every one of you has a great weekend. Now, employment situation came out on the lower end, lower than the lowest consensus. Consensus came in at 163. Lower end of the range was 150,000. We only have 130,000. That's not good. That's bad. That's telling us that the China trade war is now impacting companies, impacting employment. That's not a positive sign. It also means that the Fed is more likely than not to lower rates. But the problem is that's already priced into the economy. Look at here. Even with even with the employment data lower, let me show you something here. The bond market right now, prior to the opening session, and weaker employment is telling us that the Fed is more likely than not going to lower rates again. But look at the bond market overnight. This is the futures contract. It's actually a little lower. Very slightly, but it's lower. It's not higher. And the S&P, since the report came out, has been about the same. So again, the report just came out about 18 minutes ago. The market is already expecting this. So it's not a catalyst. There's no major catalyst. In my opinion, based on what I'm seeing right now, sorry, that was my little cat there. Let me put him on screen so you could see him. Here he is. He's a Scottish fold. He has folded ears. Hey, Clyde, say hello to everyone. Anyway, let me show you something very interesting here. This is the put to call ratio, and this is telling us that the market is getting stretched out to the buy side, which means there's not much more upside before the market turns lower. All right, maybe a little bit more, but that's it. Usually when there's too much bullish activity, we see 0.85 or lower, and right now we're seeing 0.82. That means the market's getting close to the top, and there's a good chance we may see a spike down again today. Don't expect new highs on the market. There's just no catalyst for it. Employment data's weak, and the Fed already is pricing in with about 85-90% certainty that interest rates are going to go lower. So there's no major surprises, no major catalyst. And with the rubber band being stretched out to the bull side, as we could see here by the put to call ratio, it was fairly neutral for a few days. And it went really quickly from being bearish to being really bullish. But whenever you see it really, really bearish, that means the market's going to turn. Whenever you see it really, really bullish, the market's going to turn. Usually bullish is 0.85 or lower. It's at 0.82, which is telling us there's a good chance the market's going to revert back to the 50-day line. Now, looking at the stock market, let's look at the dashboard again. I want to show you something important here. Let me reduce the time period a little more. We're right now trading the first day. Actually, let me look at the SPY. It'll probably be better because it's only going to show us daytime data. All right. We touched the 50-day line. I don't want you to think or get suckered into this market before the S&P has 2 complete days above the 50-day line. That's if assuming today will close above completely and not touch or go lower. Today will be the first day. You can count yesterday as the first day, but that's not really true because it touched the 50-day line. I want to see complete 2-day clearance above the 50-day line. If I don't see that, I'm going to believe the market's going to come back down into the twilight zone. Also, we're near overbought levels, and with the put to call ratio being bullish, like we're seeing right now, there's very little upside left, in my opinion, and we really need a catalyst to go higher, and I'm not seeing it. Therefore, I believe speculative stocks are going to fizzle out, and defensive stocks like utilities are going to make a comeback and rally once again. That's my opinion. We'll see if it's true, but I'm not expecting a super bullish market from where we're at right now. You guys have a great weekend. I know last week was rough because of Dorian. You guys enjoy this weekend. Take care, and I'll give you my next update Monday morning. If you guys are enjoying this, if you guys are getting something out of this, please send me an email, support@marketgeeks.com. Talk to you soon. Bye.